I'm joined now by Andrew Kiguel, who is the CEO of Tokens.com. Andrew, welcome.
Hi there, how are you?
What is the business of Tokens.com?
So Tokens.com is a proof of stake technology company. Staking is very similar to crypto mining. You might be familiar. We've talked before about Hut 8, my previous company, which now has a 600 million market cap. This is next generation technology to do the same thing, but without the use of electricity or expensive hardware.
That's intriguing. So you are mining Bitcoin then?
We're staking digital assets and we're doing it. So as a quick example, let's say you had $10 million for mining versus staking. As a miner with 10 million, you'd have to order 6 million of equipment and then reserve another 4 million for the cost of electricity. We take the entire 10 million and we buy the actual digital asset and perform the exact same work that a miner does through a different technology. However, instead of having depreciating equipment, we have this underlying token that can appreciate. So right now we're staking Ethereum. Ethereum is just on a complete tear right now, and we're earning a 12% yield on it for providing this technology. So it's a double win.
So you're solving the problems associated with winning a token through an old process?
Instead of using electricity and hardware, we're using smart technology to perform the exact same function.
Okay, tell me about this smart technology. Is it not powered by electricity on computers?
So it's powered on computers like the ones we're on right now. But when I was at Hut 8, we built a 110 megawatt facility in Alberta that was consuming, a lot of electricity. The entire universe of electricity consumption for mining Bitcoin, and I think this is necessary, and I've written papers on this, but it consumes as much electricity as the entire continent of New Zealand or the country of Chile. So what most tokens are doing is they're shifting their underlying protocol. So Ethereum used to be, it still is mined via the traditional method. And there is a new methodology called proof of stake, which it is evolving to, which involves ownership of the asset instead of using computers. Think about it as a voting. So as before you would use machines to do the cryptology and solve the block, it is now based on ownership and votes where those blocks and those rewards are shared amongst owners of the actual digital asset. Now, Bitcoin is never moving to proof of stake. It's just, there's no governance there. It's a algorithm that works quite well. But right now, most other digital assets are all moving to use proof of stake. In 2020, there was $20 billion of rewards paid in proof of stake. And for now, there's been no way for what I would say traditional capital markets investors to get access to this. So you can buy a mining company, and then pretty soon we're on the verge of going public. You're going to be able to buy Tokens.com, and I think get superior economics and better exposure to crypto.
That is super intriguing to me. I guess I'm still a bit of a Luddite in that, the whole argument for cryptocurrencies does not resolve, in my view, to a sustainable monetary form historically, and that's fine. That's just an opinion.
And it's a good opinion. And what I find, I have this conversation. I think traditional investors, and I was one of them, it's very easy to determine value with something physical. Like I can hold the pen and say, this is worth 50 cents. It's really hard to conceptualize value of something that doesn't physically exist, like a digital asset. So I understand the quandary that you're probably, grappling with in your mind.
Sure. Well, unlike a physical asset, a digital asset only exists if both parties involved, if there were only two parties on the planet who had to agree which is real and which isn't, you'd need both parties to agree that a virtual asset is real, even though there is no physical manifestation of it. Whereas with a physical asset, there's no denying its reality or its existence and tangible physicality. But you have to agree that this is a transportation unit of value. You both have to agree that it can
absolutely. And millennials have a much easier time grasping that concept, I think, than do traditional investors.
I can understand that.
And I'm not a millennial, by the way. I'm 50 years old, so.
Right, I'm 57, so we're on the same page more or less. Ethereum is a different beast altogether. It's like the Ethereum value proposition I understand and I support undeniably because it carries within its form, though it is virtual, it contains functionality, verification, and a unit of value that constitutes a contractual settlement or any variation on that configuration. And so when it comes to Ethereum, the value proposition is clearer for me. I just did a Donald Trump there. I just realized. But so anyways, the tokens.com thing is highly intriguing to me. You say that that investors are going to be able to play this because you're going public. Tell me about the capital structure, and you touched briefly on the revenue model in that you're earning 12% on the use of your assets. Tell us a little bit more about that.
Yeah, so we press released last week that we signed an LOI with a company called COIN Hodl, which is a TSXV listed shell. So we've entered into that RTO transaction. We have also announced that we are going to be launching next week a $20 million financing that's being co-led by Stifel GMP and Canaccord. It's going to have a host of other syndicate underwriters there that you would be familiar with. And it's going to be a subscription receipt offering, 20 million. We've already had a lot of institutional interest circling around, a lot of retail interest before we've even launched and get that going. I think for us, I started this business after leaving HUD 8, wanting to sort of find a better way to do things. So I have the experience of building, a sizable company in the space. And we took this idea to some of the largest VCs in Silicon Valley. And surprisingly, they came back and said they love the idea. They love staking and creating a public company representation of this. We got them all into seed investors. If you look at our current investors, we have Hive, BitBuy, Olaf Carson Wee, who is the founder and CEO of Polychain, one of the largest VCs in the world, is a personal investor. We've had other guys circling around us like Tim Draper. So people are excited about the idea. We've validated it. It's working, and we can scale it very quickly. That's another benefit over traditional crypto mining. You have to order the equipment, line up the electricity, order it. It might take 6 to 9 months to arrive and then install it. Proof of stake, because it involves the ownership, we can deploy vast amounts of capital very quickly to get really good returns.
Interesting. Okay, so when do you anticipate this being available for public consumption?
So the initial public offering is going to start next week. Okay. And I expect we are getting everything ready. We've been talking to the regulators to make sure everything is copacetic, and I expect this to be trading before the end of Q2 this year.
Okay, let me ask you this. What was the price paid by your seed investors relative to your anticipated price at IPO?
Lower. However, what I would say is price is an interesting thing. So I've personally, the seed investors put in pretty much $1 million to get this thing going, myself being one of them. And we have built up the company in terms of the hiring. I'm not taking a penny out. Everything is going to be fully disclosed. The pre-money valuation that we're going out with is going to be close to 30 million. However, we now have close to 10 million of assets that we are managing and staking. So on that basis, when you look at it on a post-money basis, particularly relative to where these other crypto companies are trading, we are extremely, what I would say, our valuation is multiples and multiples lower than anything else that's trading right now.
Right. Okay, Andrew. Well, that's a great update. I'm enthused about your project, and I will certainly be writing about it to my subscribers. Thanks very much for participating today, and we'll talk to you again soon.
Anytime.